Hey, everybody. Welcome to our live event today. We just want to give a couple more minutes for folks to hop on before we start. Tessa, I'm trying Janik. I am a realtor with Madison and Company Properties, and my partner Tessa Larson is on here too.
Hey there.
And so, like I said, we'll give folks another minute or two to jump on. But in the meantime, if you are joining us from your laptops or your phone, welcome, and let us know where you reside. If you live in Conifer, Evergreen, Bailey, Pine, or if you're down the hill.
I'm going to just send out a little shout out too to invite people, Trang.
Okay. Can you see if we are actually on live? We should be. We should be a go.
Yeah. I'll check on my phone. This is our first time
I see we have one person on. Yay. Hello.
Hooray.
Where are you
How do
from? We actually can't see who's there. So until you comment, we don't know who you are. You're just a mystery person.
Let me see. We'll get all the kinks worked out while we wait.
Hello. All right.
Yes. I am seeing. Yes, it's showing up on our page.
Perfect. So we're a go. All right, Tessa, you want to take it away?
Sure. I am just sending out a reminder really quick. Oops. Never mind. I don't want it to go there. So as everybody probably saw on our posts and our invites, we wanted to take this opportunity to really chat about our homeowners insurance, and in particular how it pertains to wildfires or in the event of a total loss. It's something that we often look over, or you get your insurance and you move on, you don't follow up with it for years. And that's why we have Bruce, who has years. Bruce, I'm sorry, I can't remember how many years you said you have.
I've owned the agency for 6 years.
Okay, perfect. And it's up in Evergreen, and so knowing about wildfire coverage is something. And we've invited him here with us today to just go over is some important topics, and so we can ask some questions.
Thank you, Bruce, for being here. So before we introduce you or let you, do your little introduction, Bruce, I just wanted to make mention that we want this to be like an open forum for the community. Bring your questions. It's going to be very conversational. So if there's anything that's at the forefront of your mind or any questions that keep you up at night regarding homeowners insurance, feel free to add your questions in the comments, and we will get to those as they come. So without further ado, we would like to introduce Bruce Anderson with the Bruce Anderson Insurance Agency with Farmers Insurance based out of Evergreen. And like Bruce said, he brings at least 6 years of insurance knowledge to the table, and he was so gracious and immediately volunteered to be here with us today. So thank you for doing that, Bruce, and thanks for serving the community and spreading your knowledge and expertise.
Well, thank you. The first thing I want to tell you guys is that the Marshall Fire in Boulder County should be a wake-up call, frankly, for every community. But that was a very unusual event to happen in Metro Denver area. That's something that you really would equate a wildfire like that with somewhere in the foothills or in the mountains. It's not typical for an event like that to happen, as we like to say, if you're down the hill. There are several different coverages which you need to look at. I can tell you that my phone has been ringing off the hook with current clients wanting to understand how well they're covered, because they've heard stories on the news that the coverage for some of the people who lost everything was not what they thought it was. I can talk a little bit about what home insurance is like. I teach 2 classes for the Mountain Metro Association of Realtors. One is on homeowners insurance and how insurance impacts in real estate transaction. And the other is specifically on fire and wildfire mitigation and what is appropriate in terms of mitigating a property so that it becomes defensible for the fire department.
And Bruce, speaking of the classes that you teach with Mamar, that's how I really discovered you and got to know you a little bit, was through taking your class for the CMAS certification, the Certified Mountain Area Specialist class. So I wanted to before we jump into the questions, I want to share my screen real quick, because there was this one image that really put things into perspective. And I want the public to see this too, because it's a good, it's a really good visual. So let's see, where is that? Here we go. And if you could just speak to this for a second.
For sure. So what this is it's the map of the state of Colorado. Every area that you see that is circled in red is what's considered a high-risk wildfire urban interface area. So virtually all of Jefferson Park and Clear Creek counties are in that red zone. Also south of Metro Denver in the Colorado Springs area, that's a very high wildfire risk area. 2 major fires down there with the Black Forest Fire and the Waldo Canyon Fire back in 2011 and 2013.
Thank you, Bruce. All right, let me stop sharing. Tessa, did you want to start out?
Yeah, I think, Bruce, we'd love to hear just, why this topic is important to you, and, why it's important for you to be here with us today, and some of those topics. And then we have a few questions that we kind of wanted to highlight, because we think it's questions that we have, or our clients have, or that we'd like to be able to answer for our clients before they know they have the question. And so if you want to just, and we kind of have touched on it some, but why is this particular topic so important, do you think, for our homeowners in the foothills, but also, in town? Why is this so important to keep at the forefront of our minds?
Yeah, so the state of Colorado actually has more private real estate parcels in known wildland fire interface areas, urban interface areas, than any other state in the country. And the property that is at risk in these wildland urban interface areas is extremely expensive. And it's frankly not a matter of if, it's a matter of when that we're going to be facing a major wildfire potential catastrophe, much like what happened in Boulder County. My agency really has been built on client service. And one of the things that we do is that we really focus on the client, and we can insure virtually any property that's in a high wildfire risk area. And that is becoming much more difficult right now, especially in the wake of the Marshall Fire. But because insurance companies, if you think about last year where there were major wildfires, in Grant County, out near Glenwood Springs, near Steamboat Springs, that insurance companies they're really taking a hard look at their appetite for homes in a wildfire risk area. And there's just a lot less insurers that are willing to take on that risk right now, even in what the surplus market. And I'm working with some clients right now where I've had to quote them in 4 or 5 different companies before I find a company that will even assume that risk. So it's a big issue here. And I'm really passionate about it. I just believe that, I won't insure a home if I don't think that it's defensible from a first responder and fire department standpoint. There's a lot of homes in our area where there are pine trees growing through the deck. There are branches that are laying on the roof or in gutters. What really sparked this terrible event in Boulder County was flying embers from a small, looked like shed fire. And, it was just the perfect storm of 80-mile-an-hour winds and embers that got stuck in eaves of homes. And then once one goes, the chain reaction effect, is just impossible to stop.
That actually leads us into one of our questions, which was, tell us a little bit about defensible space. How is it important? What can you tell us that's something easy that people can do as that easy first step? And are there ways, like we know that there's, FireWise certification. Does that affect your insurance, or, can it discount your premiums? Tell us a little bit about that.
Okay. So there are 3 defensible space zones, really, that fire departments and wildland land managers look at. The first thing that, from our standpoint, what we're concerned about is, unless it's ornamental landscaping, we don't want any trees within 5 feet of the dwelling. Any trees that you do have on the property, and this is a little bit difficult, but I'm going to say from the actual dwelling out to 30 feet, we like the branches on those trees trimmed up at least 6 feet so that a grass fire can't easily climb into the crown of the tree and create a much worse situation. In terms of native grasses that are in the area, we like those trimmed to 4 inches or less, again, for that same reason, so that they don't flare up and get into the crown of a tree and create a much worse situation. Because this fire started as a grass fire, and then it started the Marshall Fire, and then it started moving east with the winds, and before long it just got out of control, and it was not defensible because of the winds. All of those neighborhoods had fire hydrants. They were on public water, but the winds were so fierce that firefighters couldn't even get into those neighborhoods to protect them because it would put their life at risk. So those are a couple of the things that we like. In terms of things that you have on your property, it's a good idea to clean your gutters once a year. If you're stacking firewood, we like that 30 feet away from the home, and not, sitting there on the porch or on a deck where it's just fuel ready to burn the dwelling. So I'd say from 0 to 30 feet out, that's the area that really can create defensible space and save your home.
30 feet. Okay.
Perfect.
Well, how about this? Let's kind of go back to basics a little bit. For somebody who doesn't know where to start as far as where they need to look in order to understand their insurance policy, where should they start? Should they print out their declarations page as a roadmap? And then can you go into the basics of, I think it's actual value and versus the replacement value? Can you talk about that, Bruce?
Sure. So a good place to start is with your homeowner's declaration page. There are certain coverages that are included in every homeowner's policy. Bear with me one moment. I just want to pull one up so that I can walk you through it. But from an insurance perspective, we don't insure things for real estate value, market value. We don't care about the value of the land. That's not what we're insuring. What we're insuring is the dwelling and any separate structures on that property. Could be a fence, detached garage, barn, something like that. But we don't insure the land. So typically a homeowner's policy, the most important coverage is the dwelling coverage. So for purposes of insuring the dwelling properly, what I like to use in this area, and it's really gone up in the last year because of the cost of building materials, what we do is we build a rebuild cost estimator in our system to tell us exactly what the system thinks it's going to cost based on components of the house to rebuild that home. And typically what comes out of our system is not enough to rebuild the home, especially in today's inflated building materials market. So what I like to use as a benchmark is finished square feet. So let's say there's 3,000 finished square feet times $325 per square foot to rebuild. Okay. And that's a minimum that I like to use as rebuild cost. If it's a custom home or a luxury high value home, you've got to increase that dollars per square foot to maybe $400 or $500, depending on what the finishing quality of the home is. In terms of building materials. So we like to insure for $325 a square foot. There are 2 types of dwelling insurance. One is replacement cost value and one is actual cash value. What you want is a replacement cost value policy, which means we are going to replace that dwelling or any major damage to the dwelling if there's a major loss with the same fit, finish, and quality that it had before. And we're not going to depreciate or devalue any portion of the home. In an actual cash value policy, that's a depreciated value policy. It might be less expensive, but when it comes time for a claim, the insurance company is going to look at how old the house was, how much it may have depreciated in that amount of time, particularly the roof, the decking, the exterior materials. And they are going to say, hey, look, you've owned this house for 10 years. The roof is not worth what it was 10 years ago, and they're going to devalue that roof. Okay. So
We've
what you
seen
want to have in your policy is a replacement cost for all components and for your personal property, your contents.
Okay. Bruce, we do have one question from Cindy. She says,
Hi, Cindy.
Hi, Bruce. Do you need to have special coverage to handle removal of debris after a fire? And what do you need to do to cover your well and septic?
Good question.
So in terms of additional coverage for removal of debris, most homeowners policies, we start with that base dwelling coverage, which, as I said, is around $325 a square foot. In most policies, and almost all of them, you can also get extended dwelling replacement cost, 25%, 50%. And there are some policies that offer guaranteed replacement cost. And that extra coverage pays for the demolition and removal of the debris in the event of a fire or any other event where the home is completely lost, like an internal explosion or something like that. Okay. Well and septic would be considered separate structures on the property. And there is another line for separate structures in each homeowner's policy. The typical separate structures coverage is 10%. So that's 10% of the dwelling coverage. So if you're covering the dwelling for $600,000, your separate structures coverage is going to be $60,000. Okay. And that typically should be enough to repair or replace the well and septic that got damaged as a result of a wildfire. Okay.
Perfect.
Okay.
Is getting an appraisal and reapproaching your insurance coverage every few years something that people should do? Do we want to look at, because that
Or does
cost
loyalty
to rebuild is going to change over time, right?
Correct.
So is there something we can be doing to stay up to date, or is that something that, like, once you set it, you're good?
No. So in fact, in the wake of the fire, my calendar has been filled with clients who want to go over their homeowner's policy and make sure they're covered enough, because they've heard, these terrible horror stories about the people who lost their homes and how there wasn't enough insurance coverage for them to remove all the debris and rebuild with the same fit, finish, and quality and square footage as before. Perhaps because, especially in that area, nobody ever expected a total loss to happen, or they didn't have an annual review with their insurance agent, or they bought a policy online because they wanted to save money. I would recommend working with an insurance professional. And if you are underinsured, every insurance professional has errors and omissions insurance, and you can have some recourse through your agent if they did not insure your property properly. Okay. And we recommend an annual review. I've got a relatively large book of business, so it's hard for me to review 600 households or 700 households every year. But at least every year or 2 years, you should have a conversation specifically on your homeowner's coverage with your insurance professional.
Perfect. And we also had a question about, like, distance from a fire station. Is there, sorry, I'm having some home fixes of my own with a new furnace today. So, is there anything that we can do? That's not what I'm asking right now. Sorry. We are wondering about proximity to fire stations.
Okay.
Is that something that can help with the insurance policy?
Absolutely.
Something to be aware of?
Yeah. So every home has a fire risk score, and each insurance company determines that score in different ways. But let me tell you what the factors are for an insurance score. Most everything down the hill has a fire risk score of 0. Okay.
Oh,
For
okay.
us and farmers, we have this thing called the fire line score, and there's a third-party geospatial company that helps us develop that score. The factors that determine that fire risk score are slope of the land, how steep is the slope around you, access to the property, if it's a one-lane road where it's difficult for a fire apparatus to use that road, that's a rating factor. What is the proximity to brush and fuel? If it's in a highly forested area, that's going to have a higher fire score because there's native grasses, there's trees, maybe you back up to open space, and you don't have any control over mitigating that property because it is open space. That's a factor. Proximity to the responding fire department is a huge factor. And anything over 5 miles is typically a problem and is going to have a much higher fire risk score. I have a client right now that I'm trying to find insurance for. I've quoted him in 5 different companies. Nobody will accept the risk because it's 11 miles from the responding fire department. And if it's 11 miles away and there's a fire, chances are that home is going to be lost. So proximity to the responding fire station is really important. And whether the fire station has full-time help or all volunteer help is also a rating factor.
Perfect. That's something I would not have thought of. So,
No. And just quick question. Is that something that is automatically, determined when they're doing the underwriting, or is that something that the homeowner should bring up? Oh, I'm within 5 miles of a fire station. Is that automatically applied?
That's the systems that we work in, unless it's a surplus lines carrier, in the background during the rebuild cost estimator, they understand. In fact, I can tell you with the systems I use with 3 or 4 different companies that I quote in, I'll know on screen 2 or 3 what that fire risk score is because it's all built into their software.
Okay.
Perfect. And we do have another question. Janine is wondering, do I have to rebuild after a fire? I have $1 million view, but if it all burned, I wouldn't want to rebuild here. Can I cash out?
Okay. So let me tell you how that works. So
Thank you, Janine.
on the base, let's say you have a complete loss. There are 3 scenarios that you can deal with the insurance company. One is I'm going to rebuild and I'm going to rebuild on the same place. You will get your dwelling coverage, your additional living expense coverage, and you will get your extended replacement cost coverage. So let's say the home base coverage is $600,000 and you have 50% of additional replacement cost coverage, extended replacement cost on the dwelling. You have $900,000 to rebuild where you're at. Okay. That's option number 1. Option number 2 is, I want to rebuild, but I don't want to rebuild on the same plot of land where we had the fire. So in that option, you also get the dwelling replacement cost plus the extended replacement cost coverage on the policy to build somewhere else. Keep in mind also that if you don't decide to build on that plot, that you can still sell that land because you own that land. Okay. So if you build somewhere else, you get the full boat. You get the dwelling replacement cost coverage and extended dwelling replacement cost. If you say after this loss, you know what, I'm done. I'm going to buy a house somewhere else and I'm going to walk away. In that situation, you will only get the dwelling replacement cost coverage line item, the $600,000 and not the $900,000 that includes the 50% extended replacement cost coverage.
Hopefully that makes sense, Janine. And if not, you can just reach out to Bruce Anderson after this call. But just to reiterate, Bruce, you were saying that the homeowners insurance will insure against the structures and not the land. So if the structures were to burn down, you still own the land and you can sell that too.
That is correct.
Okay.
Perfect.
Great.
And we have another question from Cindy as well. If my home burns down, what type of coverage should I carry to handle living expenses for a rebuild that could take 1 to 2 years?
Okay. So that's called additional living expense coverage, ALE. I would have your ALE coverage at least at 30% of your dwelling replacement cost coverage. So let's go to the $600,000 dwelling base dwelling coverage. 30% of that is $180,000. Now, that additional living expense coverage, there's also an additional living expense term. Some insurance companies don't have a limit on the additional living expense dollar amount. It's just whatever the actual sustained loss is, regardless of total. But there's the second component of that ALE coverage is how long that you can use that ALE coverage. Most policies default to 12 months. On every single policy I write, I always change that to 24 months, especially in the case of what you just saw happen 3 weeks ago. There's no way those homes are going to be rebuilt in 12 months. Okay. And the additional living expense, remember, while if you have a mortgage, when the house burns down, you still have to make those mortgage payments. Some of those mortgage payments can be made from the additional living expense coverage. You're going to have other expenses like the living in another home or an Airbnb or an apartment or whatever the alternative living arrangements looks like. And you need to use some of that ALE money to pay for the rent for that as well. Okay, because your mortgage isn't going away and you've taken on a rental property that you need to pay for. The other thing that the ALE pays for is any food, clothing, any expense that you incur as a result of being displaced from your primary residence. So that's what that's intended to cover. And like I said, I recommend at least 30% of the dwelling coverage for your alternative living expense coverage.
Okay.
Great. And
great.
how do people receive that ALE? Like, are the people who just lost their homes and lost everything to this Marshall fire, are they still waiting for that? Are they like, does it take months? Can it take months?
No. So typically what happens in a catastrophic situation like that, or even if it's a single home that burns down, is the insurance company is on that immediately. And most major companies, flew people in because it was a catastrophic loss, and they immediately start cutting checks. They will cut checks, the next day to at least let people get started. So it might be $10,000 or $20,000 that they'll cut a check immediately so that they can find another place to live. They can buy essentials that they lost in their house, whatever that looks like. They're going to get $10,000 or $20,000 or $30,000 up front.
I read somewhere that record keeping in that instance is very crucial, like keeping receipts down to a toothbrush. Is that what you would recommend if that were to occur?
That's really not practical. And what I really advise my clients of is when you purchase the home or when you're in the home, to walk around the home with a video camera and to show all of your personal belongings that are in the house. Save that on a flash drive or save it to the cloud in the event that you have a major or total loss, that you can retrieve that and show the insurance company. The other thing that's really important about that is that if you've got some kind of special equipment, whether it's audiovisual equipment, you've got a super expensive mountain bike, I would make sure that the video shows the brand of that bike and the trim level, the model level, so that they know, there's a difference. Let's say you work in the fashion business, okay, and you work in the men's suiting department at Nordstrom, all right, and because of where you work, what you wear is totally different than if you were working at Walmart, let's say, okay. In that case, if you've got a whole closet full of Armani suits, I would lay those suits on the bed, open the jacket inside, and make sure that the brand of that suit is documented so that you get replacement cost on an Armani suit and not a suit that came from Men's Warehouse, for example.
That's a great analogy. Thank you. That makes a lot of sense. So what about this question? This is a good one. What are the top 3 fixes that homeowners can do to save on their insurance?
Okay, so for us, We also happen to live in a wind and hail zone, and we take
Mm-hmm.
large losses for wind and hail. On May 8th of 2017, there was a catastrophic hailstorm that shut down Colorado Mills Mall for 8 months. I had 95 claims out of my office from that storm. So one of the biggest things in terms of saving on insurance premiums, the first thing is the materials, the exterior materials on your house, okay? And specifically roofs, because roofing and siding is typically most damaged in a hail event. So what you would want to have is some kind of impact resistant roof. If it's a composition shingle roof, asphalt shingles, I would get a UL Class 4 impact resistant roof. That also provides a huge discount. I can tell you, in Farmers, having an impact resistant UL Class 4 asphalt shingle roof is a 35% discount on the homeowner's premium. It's very significant. There's also, if you have hardened materials for your home, if it's masonry stucco, if it's brick, if it's hardy board, those exterior materials, you're going to get a discount on because they're resistant to hail damage.
And how would you need to prove that to the insurance company? Just provide them with a certificate, or?
What we do is we have to provide the certificate at time of binding coverage. And we typically, because of where we operate, we can track down the roofer who did the work and get an invoice from them showing exactly the type of materials that were used. We try to do that work for the insured and not have the insured have to track that down.
That's perfect. And that actually leads us right into another one of our questions, which is, what are, your top 3 or 5 things that people can do to save on their insurance premiums? You mentioned that 40-year or the Class 4 roof is a big one, it sounds like, up to 35%, which is huge. Are there other things, like, I've heard of things like having a sump pump or an alarm system, or even if your washer and dryer is on the lowest level of your home, those kind of things?
Okay, so from a discount perspective, and that's what we really want to look at, there's the premium and then how many discounts we can apply to it. If you have a water detection system in your home that has an automatic shutoff valve, that's another big discount. If you combine an auto with your home, I can tell you every company has a discount for bundling your assets. So in the case of Farmers, for example, if we do a home and a car together, that's a 20% discount on each line of business. Okay. And that's even more if there's more than one car, you get a multi-car discount. The impact resistant roof we already talked about. Let's see. There are some occupations that we have an affinity discount for. For us, it's typically a first responder, whether it's part-time or volunteer, fire, law enforcement, corrections, architects, attorneys, accountants. Let's see.
Okay. So
educators, we have a discount for educators as well. So there are certain ex-military or active military, we have a discount for that. So it really depends, what and it doesn't mean that you have to work in that field. You could have a college degree in accounting and you could be selling real estate. We can still apply that discount if you could produce that degree.
That's perfect. And we have one more question from Cindy. And so Cindy said, my sister in Superior's home didn't burn down, but was covered in ash inside and out. What coverage do you need to cover restoration work?
That would come from the dwelling coverage. Okay. And if they're displaced while that cleanup is happening, that's alternative living expense coverage that would cover their relocation for a week or 2 weeks, or however long they're displaced from their residence. But fire is a covered peril. Even if your house doesn't burn down, the reason the ash is in there was from a fire. So that is a covered peril. Now, remember also that when you do file a claim, all claims are going to be subject to your policy deductible. Okay. And let's talk about that for a little bit. So The higher the deductible, typically the less expensive the insurance is, but the deductible should be something that you are comfortable with in terms of being able to write a check for whatever that deductible is before the insurance coverage kicks in. I typically suggest a deductible of $2,500. Okay. I don't think most homeowners are going to file a claim for something less than $2,500. I advise them not to typically, because when the real claim happens a year later and you've got a $20,000 claim to put a new roof on your house from a hail event, and then you have some small claim that you filed for $2,000, you have two claims within a 3 or 5 year period, and then your insurance premium is either going to go way up or they're going to non-renew you because you have two claims in a short period of time. So I typically suggest $2,500. If you go higher than that, it's typically a bad deal. So I've noticed that if you go from $2,500 to a $5,000 deductible, that's only going to save you about $300 a year in your premium, which means you've got to go claims free for over 7 years to make that savings pay for itself. So $2,500, I think, is a good number. The lowest we can go is $1,500 because we can't go lower than that for a hail and wind risk.
Yeah, that makes a lot of sense. So $2,500 is what you advise or what you recommend as far as a deductible. Okay. Yes. Let's see. Do you guys have any other questions in the comments, or feel free to ask Bruce any questions that you have. Now's the time.
I think we're caught up on the questions in the comments here, but Bruce, we'd love for you to check back, or when we're through, if anyone else has questions, be sure to tag Bruce. Hopefully, Cindy says, Bruce Anderson is a rock star, such a great resource and a great advocate for the community. Thank you, Bruce. So thank you.
Yeah, thanks, Bruce.
Okay.
We do have a couple more questions.
If we're getting close to closing, let me leave my contact information for everybody.
Oh, wait, hold on. I think we may have, what did you say, Tessa, one or two more?
There's just a couple more that we had on our list, or one more that I think we should touch on, is I've heard in the past, on radio or, talk radio or something, that people are like, you should never stay with the same insurance. You should always be reapproaching it every couple of years because you're always going to get the better deal going to a new company. Now, I also know that you can be considered a risk if you jump around too much. So where is the sweet spot for that?
Okay. So what I would recommend is having an annual review with your insurance professional. I also recommend that you don't buy, especially homeowners insurance, online, that you contact an agency, whether they're an independent or they're a captive agent with a company. I would recommend using a reputable insurance company, somebody like Farmers, State Farm, USAA, American Family, Allstate, Chubb, the Hartford, somebody who is a reputable company that's going to step up to the plate when it's time for a claim. Your insurance, it's something that nobody likes. Insurance is a necessary evil, especially auto insurance, which is really expensive in the state of Colorado. But, the value of your insurance and having an agent that you can talk to is that professional is going to advocate for you if they're a good agent in the event of a claim. And I can tell you that I've had to get involved and meet claims adjusters on property to make sure you do the right thing. Also, for our agency, I tell all of my clients, you call me, you do not call the 800 number in the event of a claim, because I'm going to manage that claim for you and make sure that you get the full restitution that you deserve that was in the policy that we sold you.
That's awesome.
Client service is super, super important. And that's one of the reasons that I've got a lot of clients contacting me right now to go through their home policy and make sure that they're insured properly. And in most of these cases, they have been. But I've had 2 cases in the last week where we've had to make significant changes to dwelling coverage because they've been in the book of business for a long time. And every insurance company each year is going to raise your dwelling coverage by some factor of inflation, but it's usually 3 to 5%. And that's not enough right now. given the huge spike in the cost of building materials that happened as a result of the pandemic. So it's a good idea. My advice is to work with an insurance professional, especially for homeowners insurance. Don't buy it online because most homeowners don't know how to value a property or how to value each additional line item that's in a homeowner's policy. They typically will buy the bare bones, least expensive policy that's available. And when it comes time for a claim, they're sorry that they did that.
You make such a great point, Bruce. As real estate professionals, we've seen it and we can attest to the fact that it is so wonderful to see homeowners who actually have a working personal relationship with their insurance agent. Many people don't, or they may discount the fact that having that actual person that you can call is so valuable, so valuable. So, right, Tessa?
Yep. Our very own Carrie Herrick is asking, how do insurance brokers verify the total square footage amount in a home?
Okay, so I can tell you what I do. And I work with a lot of new purchases because I have a relationship with many realtors in the area. And fortunately, the work that I've done for them in the past has been successful and they come back to me. What I do, whether it's they're just they're shopping for a new carrier, or if it's a new home purchase, I always pull the county records. And if it's a new home purchase, I go online and I look at all the photographs of that home that's on the MLS to make sure that we are doing our rebuild cost estimator with the appropriate components that are in that house. You know, there's a difference between a marble floor and a ceramic tile floor that's in an entryway. And we want to make sure that we build that rebuild cost estimator with the correct components that make up that home. You know, there's a difference between a steel coated metal roof, and a corrugated metal roof. Okay. And there's a major cost difference, which needs to be built in to that rebuild cost estimator. But I still like to get to at least 325 a square foot or more.
Do you verify beyond checking public records? Because as Carrie is saying here, and we've all seen this being in real estate, public records aren't always accurate. You know, my house that I'm selling, it's about 16 something, but for whatever reason, when you pull the county records, it says it's 1,000.
Okay.
So
let me tell you why that is. All right. The county records and our systems bring in the square footage from the county records. The county records typically for finished square feet do not include a finished basement, do not include a finished attic. So let's talk about Jefferson County in particular. So when I look at that, when I look at the property records, the assessor records for a specific address, if you dive deep enough there, you can see that there is maybe the main dwelling is 2,200 square feet and half of the basement is finished. Okay, so that's another 1,100 square feet. I take into account the 3,300 square feet. And in the county records, it will show you, it'll say basement, walkout, and the number of square feet that is. That all has to be included as finished square feet when you're doing your dwelling calculation for replacement cost. And that's one of the ways I do that. Also, if it's a home that has to go through fire risk underwriting, and 95% of what I do has to go through fire risk underwriting, I do a visual inspection of the exterior. I take photographs to show that the property is well mitigated, because that's the only way I'm going to get it through fire risk underwriting. But I really think that the MLS listing is hugely helpful, because that will list the amount of square footage for a finished basement or a detached structure that's maybe a guest house and it's not a garage. And again, you've got to value that at what the rebuild square footage would be on a finished separate structure.
Perfect. And also added by Carrie. Okay, two things. She's wondering, as we all are, is there anything we can do as realtors to help our clients be the most prepared and have the most accurate info?
I would, from an insurance perspective, I would say refer to a trusted partner. I typically have a conversation with the realtor who refers me, not just with the client, but with the realtor as well, to let them know how I think the home should be insured.
That's great, because I can't remember the last time I actually spoke to the insurance agent during the transaction.
Yeah, I think
Basically
it's
just-
really, really important. At the end of the day, we're working for you and we're working for the client. And as I like to tell my clients, I like to sleep at night, and I want to make sure that you're not underinsured. And I also want to make sure, because I've lost clients who have called the 800 number in the event of a claim instead of calling me first, and they got the wrong person on the other end of the line. That's why I want my clients to call me in the event of a claim. And all of my clients have my cell phone number as well.
That
We
makes sense.
communicate by voice and by text.
I think that's important for all of these industries that we're talking about, real estate, lending, insurance. It does make a difference to have a person who knows your community, who is there for you in the case of an emergency, who can help guide you rather than that 1-800 number. So
Yeah.
I think that's just kind of a blanket statement for all of us. And then I'm going to ask one more really quick question, and then I think, we should
Yeah,
probably
I think we're going to
hop
be
off.
we're gonna run out of time soon, so
I
we're
have
gonna wrap up.
I have heard from people say roofers when they're like, well, if your neighbors are all getting their roofs done, your insurance rates are going to go up regardless if you do or not, because there's been an issue in the area. So go ahead and get your roof done then. Is that a true statement, or does it really work that way?
It doesn't work that way. That's not a correct statement. I think that's a roofer who's looking for additional business. I will say this though, it's really interesting. So let's say there's a hail claim and we replace the roof. Okay, yeah, there's going to be a small surcharge for the having the new roof. Okay, you might get your bumped up, $200 or $300 a year because you filed the claim. But that entire increase is going to be mitigated by the discount you get from the new roof. So
Yeah.
I would say if you've had a covered peril event, hailstorm, rain, wind, lightning that impacts your roof or any other part of your dwelling, go ahead and have a professional look out there, have them inspect the property. And they will tell you, because there's another thing I just want to bring up in closing too. So your claims activity has an impact on your rate. Okay. And I typically want my clients to have an inspection done by a roofer or a carpenter if it's siding, to make sure that when the adjuster does come out, that there is truly that the damage is from hail and not just from wear and tear. Because once I file a claim, that claim, whether it's a zero payout or a $30,000 payout, is on your record as an insurance claim, and it's on your CLUE report. And the CLUE report is similar to your credit report from Experian, let's call it. Okay, it tracks claims at locations as well as for the insured. And in our case, I'm in the process of insuring a client right now, and they have 2 claims in the last 3 years, and they were both on the same day. Okay, so it was the same event. The insurance company should have only filed 1 claim instead of 2, and I'm going to have to negotiate with our underwriters to accept that risk, because the insurance company filed 2 claims for the same event on the same day, and it should have been 1 claim. So
I think that just goes to show that, calling that 1-800 number, because a lot of people don't know, when you call the 1-800 number and you say, I might be interested, I need to know if I should file a claim or not, they're going to put it in as a claim. You may as well do it. So call your agent, call Bruce. Don't call the 1-800 number, and they can help guide you through that process on next steps and how to really work through that.
for sure.
Trey,
And that's for any claim. I mean, if you have a fender bender and it's $900 worth of damage and your collision deductible is $500, you don't want to file that claim. I mean, pay the $900 and not have the claim on your insurance record, for something like that. Now, if you rear end somebody and it's $3,000, absolutely use the insurance.
Right. Yeah. Use your mind. Use your head. It makes sense to not make the claim on that one. So,
Yep.
all right. Well, Bruce, we're running out of time, but I just wanted to, before we go, I know that this conversation has probably spurred some more questions out there in the community. So, folks, if you're watching, feel free to leave your questions on the Q&A in the comments. Bruce, if you would be so gracious as to answer them, at a later time, if you can. We just don't want to leave any folks hanging. But also, if you do have any other questions, you want to contact Bruce yourself, tell us how we can best reach you, Bruce, and where your brick and mortar store is.
Okay. So my office is located in Evergreen at 28,000 Meadow Drive. It's basically in the same building as Evergreen Oral and Maxillofacial Surgery. It's right near Campfire Restaurant at the corner of Meadow Drive and Highway 74. My office landline is 303-674-2724. My business cell is 303-718-9966. And my email address is banderson2@farmersagent.com. And please
Perfect.
feel free to reach out with any questions. I'm more than happy to help. And best of luck.
Yeah, thanks so much, Bruce. And we did have a question about being able to share this, Trang. So we should be able to just make it public. Our page is public, so it should be shareable. And Trang and I will work on, bookmarking, even if it's just in the, the text body of the post where we answer certain questions, so for easy reference in case someone can't watch the whole 52 minutes that we've gone now.
And also for everybody who's been watching, we have a very special little takeaway for you. It's a one-page infographic. It's a beautiful infographic where Bruce has given us some information, kind of just highlighting some of the points that we discussed today. So we will post that. Follow our page so you can have access to that, or you can just drop your email and we'll email it to you. But yeah, that's we're going to be posting that here soon. So
perfect. Thanks so much, Bruce. Thanks, Trang. And thanks everybody for joining us.
Yes, Bruce, thank you so much for being our guest today and for all the valuable information that you provided. We are so grateful that you could be here. I know you've been so busy, as are we, but thank you. And thank you for anybody who's been watching in Facebook land. Let us know how we did and if this brought any value to you, because Tess and I love to bring value to the community. And so we'll keep doing this if you think it brought value. So that's it for now. We're signing off.
Thank you so much.
Perfect. Thanks,
care.
everyone.
All right, everybody. Have a great day.
We'll
Bye
see
now.
you later.